All right, so welcome everyone. We're diving deep into the wild, wild world of money.
It's something we all use every day, right?
Oh, absolutely.
Yeah.
But have you ever really stopped to think about how it all started?
Or where it's going. It's a
You
pretty
should.
fascinating story.
Totally. And we're going to explore all of that right here, right now, based on some super interesting excerpts we've got from Vola.
Had a long history. Goes
Yes.
way back, as old as civilization itself.
Okay, so get this. Imagine it's 5000 BC.
Whoa, way back.
You really need a new plow, but all you've got is like one cow to trade.
And that right there is the first big problem. Finding someone who not only has a plow and is willing to trade it, but also just happens to need a cow.
Right, at that exact moment.
It's this double coincidence of wants thing, made bartering super inefficient.
It's kind of like, I don't know, trying to trade a rare Pokemon card for a bag of cookies.
Exactly. Slim chances of a perfect match.
So not surprisingly, ancient civilizations started trying for something better, something standardized.
And that's where our story takes a turn towards ancient Mesopotamia. They started using barley as money.
Barley, like the grain.
Sounds strange to us, maybe, but barley was super important back then. Staple food, easy to measure and divide, didn't go bad quickly.
Practical, I get it.
It was a huge leap forward, way better than bartering a goat for a wheelbarrow, right?
Totally. But I mean, I'm picturing everyone lugging sacks of barley to the market.
Yeah, not the most convenient.
Not at all. But this whole standardized unit of value thing was huge. And it kind of gets at something we still deal with today, trust.
Yeah, people had to trust that barley would keep its value and that other people would accept it in future trades.
Just like today, we trust that the dollar bills in our wallet have value because the government says so.
Exactly. But even with barley, there were still limits.
The limits. Okay, I'm intrigued. What happened next?
So, fast forward a few centuries, we're in the kingdom of Lydia, around 600 BC, and bam, the invention of coinage.
Now you're talking. I've always loved old coins. Little pieces of history, right in your hand.
They are. And they solved a lot of those early money problems. Made of gold and silver, mostly durable, easy to carry around, and their value, recognized everywhere.
Yeah, that makes sense.
Plus, those images on them, not just decoration, they represented the authority behind the coin, backing up its value.
So it's like a guarantee, a tiny guarantee backed by the power of, I don't know, a king or an empire.
Precisely. Revolutionized trade, made more complex transactions possible, commerce over longer distances. Huge impact.
Shaped power structures, you said.
And even cultural identities. Think about it. All those Roman emperors on coins, Greek gods, symbols of power and myth.
They were statements.
Exactly. And that brings us to another point, the power of money to tell stories.
Wow, yeah. Coins became artifacts, historical records, even works of art. We've gone from cows to sacks of barley to these little discs of precious metal that hold value, tell stories, and connect empires.
That's incredible, isn't it?
Totally. But I have a feeling things are about to get even more complicated as we move into the modern era.
Oh, absolutely, you are right. Get ready for paper money.
Paper money. That's a big jump. What gives paper value?
Now, that is a question that has puzzled people for ages. It all started in China, actually.
China. Okay, tell me more.
So they were using these paper receipts for coins deposited in government warehouses.
So it's kind of like an IOU.
Exactly. Hey, I've got this much silver stashed away. Here's a paper to prove it.
Yeah.
And then over time, those paper receipts started trading as money themselves.
Fascinating.
People started trusting the paper more than the metal it was supposed to represent.
It's a huge shift.
It is. And it's the basis for what we now call fiat money.
Fiat money.
It's what we use today. It gets its value not from gold or anything like that, but from the government saying it's legal tender.
So it's about trusting the system.
Trusting the system, trusting the government. That's right.
Kind of wild when you really think about it. We trust these pieces of paper, these numbers on our screens, because
Well, because everyone else does too.
a remarkable social contract, isn't it? It is. But that trust, it's not always a sure thing.
It's not. Governments have always struggled to keep things balanced, dealing with inflation, counterfeiting, economic ups and downs.
Makes sense. So we've gone from barley to coins to paper money, all backed by government decree. What an adventure. But I feel like the 20th century is going to throw us for a loop.
Oh, you're not wrong. The 20th century brings a ton of new technology and money. Money's not immune to that. Get ready for credit cards, ATMs, the dawn of the digital age, technologies that challenged the very idea of money itself.
Sounds like things are about to get really interesting. Welcome back to our deep dive. Last time we were about to jump into the modern era and all the crazy changes that came with it.
It really was a whirlwind, you
Yeah.
know. The 20th century, bam, innovations everywhere you look. Credit cards, ATMs, the internet, all changing the game.
Yeah, it's like the pace of change went into overdrive. Suddenly, we're not just carrying cash. We got plastic cards giving us credit, machines spitting out money whenever you want, and then the internet. The internet explains everything.
Right. The internet was a total game changer. Suddenly money could move at the speed of light, across borders, connecting people like never before. E-commerce boom, online banking everywhere, digital payment platforms changed how we buy and sell, everything.
It's mind-blowing when you think about it. This intangible digital information becomes value, becomes the currency of this digital age. That online shopping spree you went on, that money you zapped to a friend with a few taps. You're part of this digital money revolution.
Every click, every purchase, every transaction pushes us further into this digital financial world.
A more connected system. But it's not all sunshine and roses, right?
Right. Convenience comes with a price, doesn't it?
And that price is...
Privacy and security, for starters. Our financial lives are online now, and that means new risks, data breaches, cybercrime, surveillance. It's a whole new world of worries.
Definitely a trade-off, speed and ease versus keeping our information safe. It's a lot to balance, but I'm kind of itching to talk about the elephant in the room, you know.
You mean cryptocurrency?
Crypto. It's been everywhere lately, shaking things up. What makes it so different from regular money?
It's a whole different beast. Crypto, like Bitcoin, it operates on this decentralized network called a blockchain. Imagine a giant digital ledger recording every single transaction spread across a network of computers.
Thousands of computers, you're saying? It's gotta be complex.
It is, but that's what makes it so secure. Hard to mess with, impossible to fake,
Yeah.
and no single entity controlling it. No government, no bank.
So it's like operating outside the system.
Exactly. And that's what attracts some people to it, right?
That freedom, that independence.
Freedom from banks, from governments. But of course, there are risks too.
Like what?
Volatility, for one.
Mm.
Huge gains possible, yeah, but huge losses too. And it can be used for illegal stuff. Plus, you don't have the same protections you get with traditional banking.
It's a high risk, high reward kind of thing then.
You could say that. It'll be interesting to see how this whole crypto experiment plays out.
Absolutely. But while crypto is all about decentralization, it seems like governments are going digital too. What's the deal with those central bank digital currencies? I keep hearing that term.
Central bank digital currencies, or CBDCs, they're the flip side of the coin, so to speak. Not like crypto, which is outside the system. CBDCs are digital versions of a country's regular money, issued and controlled by the central bank.
So it's like digital cash, but backed by the government.
That's the idea.
Could be a big deal for people who don't have bank accounts, right?
It could. CBDCs have a lot of potential. Streamline payments, cut costs, make finance more accessible, even give governments new tools to manage the economy.
So while crypto is going decentralized, governments are going digital and centralized.
You got it. China's already launched their digital yuan. Other countries are working on their own versions.
We're really on the edge of a new era then.
It seems that way. Digital finance is evolving fast, and we're all trying to keep up.
So much to think about. But as we get deeper into this digital world, I gotta wonder, what does it all mean for the future of money itself?
The big question, right? Technology keeps changing, and the definition of money changes with it. We're seeing this merging of the physical and the digital, centralized and decentralized, the old ways and the brand new. It's a lot to process.
Definitely a lot. I'm ready to hear what comes next.
Well, then buckle up. Let's talk smart contracts, programmable money, and the possibility of a cashless society. The future is waiting.
Welcome back for the final part of our deep dive into money. It's been a wild ride, from ancient barter systems all the way to the cutting edge of digital finance.
And now the big question, what does the future hold for money?
Exactly. It feels like we're on the verge of something huge.
We are. And like we've seen throughout history, the future of money, it's all about technology. But it's not just new ways to pay. It's about who controls the system, who has access, and what even defines value anymore.
Big question. So give it to me straight. What are the forces shaping the future of money?
Well, one of the biggest is this idea of programmable money. It's digital currency, but you can actually code it with rules, with limitations.
Coded money. That sounds like science fiction.
It does, but the tech is real. Imagine you could program your digital money so that, say, 10% of every payment automatically goes into savings.
Oh, interesting.
Or think about government benefits that can only be spent on essentials, like food and housing.
That's both cool and a little scary.
Right. It could help people manage money, make sure funds are used the right way, but it also brings up questions about control, about freedom. Do we really want our money-making decisions for us?
Exactly. It's a slippery slope. And on that note, we can't ignore the role of governments and big tech companies in all of this. We talked about CBDCs, government-backed digital money, but tech companies are jumping into finance too.
Oh yeah, they're all over it. Think about payment systems built into social media, those buy now, pay later offers from online stores. They're using algorithms to figure out who gets loans and who doesn't. The lines between tech and money are blurring.
So it's a power struggle. Governments, tech giants, and decentralized platforms like crypto, all wrestling for control of the financial system. What does that mean for regular people?
It means we got to pay attention. Learn about these technologies, the good and the bad, and speak up for systems that are fair, transparent, and put you in control of your own money.
Get informed, ask questions, demand better. That's good advice.
It is. Because this isn't just theoretical. This is the future being built right now, and we're all part of it.
We've come a long way from trading cows for plows. Who knows what's next?
Exactly. The story of money is far from over. Thanks for joining us on this deep dive into the fascinating world of money. We hope you've enjoyed exploring this essential part of our lives, past, present, and future.
Stay curious, keep learning, and until next time, happy spending, saving, and investing.